as a part of our league. And I have also mentored over 100 plus students in stock trading, managing portfolios of above 1 crore. So today I will be taking your session on stock trading. One of the one of the things that I love personally, stock market. So we'll start, and I hope everyone can hear me. And if you have any doubts, you can, write it down on the chat. So before I start, I'll just let you know some very general rules. Keep your videos on. It will actually help us engage with you all people. And it will be a good time for us if you can keep your videos on. Raise your hand whenever you want to speak, so we can recognize you if it's a question, if there is any technical fault from our side or any problems that you might be facing. And obviously engage in chat box. So there will be times when I'll be asking you a lot of questions. There will be time when I'll be asking you for a poll. Maybe I will be asking you a lot of things around this. And if you have any doubts, you can also write to me on the chat. So this is how we are going to start with the session. I hope everything's clear till now. So let's first see how much do you know about the basics of the stock market, so that we all can come up to a similar level. So with me, we have Manpreet. She's from the MBA team. She'll be sharing you the link in the chat box for the quiz for the basics of stock market thing.
Oh, the link is there in the chat box. Raghav, the link is there in the chat box.
Sure. Everyone, it's my kind request for you all to please go to the link. Please open the link.
I'm sorry to interrupt, but could you please provide a code for the quiz? It's not opening directly to the link of the quiz for me.
Sure, we'll provide you that. Just give us a few moments. Right, Manpreet.
Yes, Raghav, just sharing.
We join you from here.
Let me know whenever you all are here. I will start the quiz.
There are five participants here. Joining the fast people. What are we one of the basics quiz? Athav, can you see the screen? Is it like you can join it using your join my quiz? So we have started with the quiz. The Indian stock market is regulated by A. Reserve Bank of India, B. Government of India, C. Securities and Exchange Board of India. Let's see what's the answer here. We have four options here, and Manish, Anay, and Shanaya have given the right answer. It's the Securities and Exchange Board of India, SEBI. The oldest stock market in India is, let's see who'll answer this. We already have three answers, four answers. We have five answers. We have six answers. And yes, it's the Bombay Stock Exchange, the large street. The share price is decided by, nice question, stock exchange management, buyers and sellers of particular stocks, companies, or the government. And again, rise. It's buyers and sellers of particular stocks. Let's go for the next question. What is the expansion of Sensex? We have one answer by Manish here. Anaya has also answered, Palak has answered, and Kimaya has answered. Shanaya has answered. Let's see what Hoppy will answer. And yes, Manish is on the leaderboard. It's stock exchange sensitive index. Can we move on to the next question, please? What does Nifty stand for? National Stock Exchange 50 or New Investment Fund Trust E? Yes. It's the stock market trading time in India, NSE and BSE is it 9:30 a.m. to 5:30 or is it 9 a.m. to 3:30? I think it's 9 a.m. to it's 9 a.m. to 3:30. Perfect. So the winner of the live quiz is Monish. Congratulations. And must be visible to all of you. Can anyone reply to me in the chat? Is my screen visible to
Yes.
everyone?
Above your screen
Yes,
is
yes.
Perfect. So now we have known about a little basics of stock market. We'll understand the basics in a little more depth. Okay, let's start with it. So I'll be presenting you Stock Market 101 by Raghav, obviously. So let's understand what is a stock. Okay, so let's assume I have to open a pizzeria, Raghav's Pizzeria, which is a company, right? Now Raghav's Pizzeria costs 10,000 rupees to me to open, and I have only 9,900 rupees. I need 100 more rupees. So what will I do? Any answers in the chat? Any opinions? How can I get that 100 rupee? Anything. Maybe you would have seen Shark Tank. I'll give you a hint. IPO, okay, if I am eligible. Or maybe debt. Perfect. So what I'll do is, I will divide my company into stocks. 100 stocks of 100 rupees each. And that one stock would be worth 1% of the company. So I'll have 99 stocks. And one stock, I can sell it to someone else. So that is a stock. A stock is a part of the company, a share of a company. If my company is worth 10,000 rupees, and I have 100 shares, which means I have 100 rupees worth of 100 shares. That's 10,000 value of my company. Are you all on the same page with me? So we have imagined a company as a pizzeria, right? Raghav's Pizzeria, where each pizza has a slice. Similarly, a stock is the slice of a company, where multiple slices make one pizza, multiple stocks together make a company. Let's understand in detail. Let's imagine this pizza is cut into 100 pieces, similar to Raghav's Pizzeria. And if you buy one slice, you will buy 1/100th of the pizza. Similarly, if you buy 1% of the company, that is one share, you will buy 1/100th of the company. Perfect. Now, this 1/100th is known as a stock. I hope everyone can understand whatever I've said till now. If you have any doubts, just start writing in the chat. So, this stock provides you voting rights and a short at growth. We'll discuss how the stock can benefit you and how can it provide you dividends. So, we'll move ahead and we'll tell you. Now, perfect. So, we have understood what a stock is, right? Everyone with me, a quick response on chat, please. Has everyone understood what a stock is? Perfect. Now we'll understand what a stock market is. So now I want to sell my stock. Who will I sell it to? Or where will I sell it? I have a stock. I have to sell it. In the chat, fast, fast. Yes, I'll sell it in the stock market. So now, what is stock market? We understand market, like we'll understand sabzi mandi, right? Where buyers and sellers come to buy vegetables. Similar is the stock market. A little more chaotic than a sabzi market, but yeah. So here, buyers of that stock come in to buy the stock from the sellers, which are the companies. So it is a marketplace for buying and selling ownerships in the company. So let's see, why do people go to the stock market? So first, let's understand from the company's perspective. Okay, why will I sell my share of this thing? Now you remember Raghav's Pizzeria, it was worth 10,000 rupees. And Raghav had only 9,900 rupees. Raghav needed 100 more rupees. So Raghav will go to that stock market and sell 100 rupees worth of shares to anyone who wants to put in money in Raghav's Pizzeria. So let's see. Monish loves pizza. Okay. Now he thinks that there are no good pizzerias in Delhi, and Raghav's Pizzeria will be a new thing. It will, generate a lot of revenue. So he wants to put in money so that he could get more money in return. We'll understand how will he get more money in return. But let's assume. So he'll go to the stock market where the Raghav's Pizzeria, the company, has gone to sell that 1% share, the one slice out of those hundreds. And I will use that money to open my pizzeria. Perfect. We understand that. Are you all with me? But a yes in the chat would be great. Or any doubts? Just a quick yes in the chat. Perfect. So now, when Raghav's Pizzeria will go first time into the market, what will it be called? It's the first time Raghav is going to the stock market to raise money. What will it be called? Any answers? Does anyone know it? IPO. Perfect. Initial public offering. Initial means the first time. Public means everyone. And offering. The first time my shares are offered to public. So now we have understood what benefits will Raghav get, right? Now we have to understand what would be the benefits that shareholders get. So let's see what benefits will shareholders get. First, if Raghav's Pizzeria earns 1,000 rupees of profit after investing 10,000 rupees, then Raghav will get 990 rupees and the shareholder who's put in 100 rupees will get 10 rupees worth of dividends. Now you will say, we have put in 100 rupees, we are getting only 10 rupees worth of dividends. Then what is the benefit? There is one more thing that the shareholders will get, and that's the stock valuations. So Raghav has earned 1,000 rupees of profit. Now he says, we'll put in more money, this 1,000 rupees, into the pizzeria and get open a burger stand side me. And we'll earn next year 5,000 rupees of profit. And subsequently, in 5 years, we'll earn 50,000 rupees of the profit. So do you think the shares value will remain same if the company that has put in 10,000 rupees is earning 50,000 rupees worth of profit? Do you think it will happen? Yes, the share value will increase. So if we are having 50,000 rupees worth of profit, the share value could be like, the company's value could be maybe 1 lakh, 2 lakhs based on the market. And my share that I bought for 100 rupees will go to 1,000 or 2,000 rupees. And I can sell that and earn profit. So along with dividend, I will also get that profit. It's like investments in properties. Perfect. How does stock market work exactly? So let's start with the process of how the entire thing works. We have seen that Raghav wants to open a pizzeria. Raghav goes to the market with this pizzeria. Can he directly sell it to the people? Simply going to the market and putting a stall, and can he sell it? Can he? Can you directly withdraw your money from a bank account? Or rather a bank without any account? Can you? Or can you deposit? No, right? Perfect. So what would you need to buy and sell shares? First is a market, that is our National Stock Exchange and our Bombay Stock Exchange. Yes, a demat account. So let's assume Raghav wants to buy a property. So where will Raghav go? So I want to buy a property, and let's assume Ritvik wants to sell his property. They both will go to a broker. Similar is the place in the stock market. If I want to sell my company shares, I will go to that broker. And if Ritvik wants to buy my company shares, he will go to that broker. So what is that broker in India called? We have multiple brokers like Zerodha, Angel One, Crow, Upstocks. So Raghav goes to NSE. Ritvik comes to NSE, but Ritvik has a broker's account. That is a demat account from which Ritvik could buy and sell shares. So let's understand the procedure from downwards to upwards. Now Raghav has to open a pizzeria. Raghav goes to NSE. Raghav files for IPO, that I want to offer my shares. The NSE releases the data of my company. People read that data. So Ritvik reads that data. Now Ritvik decides to buy shares in my company. Ritvik opens a demat account on a broker, maybe Zerodha. Let's take Zerodha. Now, once he has done all the verifications on the demat account, he can add in money from the account, bank account, and simply buy and shares from the stock market. Got it? Any doubts? Anything that you want to discuss? Any questions around this? Anything? Anyone? If you have any doubts, you can ask me in the procedure, in the flow, anything outside of that. Perfect. I don't think there are any doubts. So we'll understand key market participants now. What are the key market participants? So FIIs, DIIs, mutual funds, retail investors, and promoters. Now these are very hard terms, but these are very easy terms. Okay. So let's start with promoters. Who are the promoters? As you can read, the founders and the owners of the company are known as promoters. Okay, so let's get a quick trivia. Who will be the promoter of Zomato? Zomato, fast. Dipinder Goyal, exactly, because he's the owner of he's the founder of the company. Similarly, who will be the promoter in Reliance? Yes, Mr. Mukesh Ambani, because he's the owner of the company. Now, what are retail investors? Retail investors. Who are retail investors? Retail investors. So retail investors are very simple people. If I put in money, if Ritvik wants to buy shares, any individual who uses his personal capital will be known as retail investor. So from anyone who's buying 10,000 rupees worth of shares to 1 crore rupees worth of share from the personal capital will be known as a retail investor. Now, the biggest mutual funds, something that is, we often hear what mutual funds are, right? We have often heard the line on the television. Mutual funds में निवेश करना जोखिमों के अधीन है, कृपया ध्यान से पढ़ें कागजात. Something very funny line, and it goes very fast. I took only 5 seconds. They teach it in only 1 second. So what is a mutual fund basically? In a mutual fund, individual investors come together to pool in money and then invest into the stock market. So let's assume Raghav does not open a pizzeria but a mutual fund. Okay. Now Raghav says that I will give a good return to a lot of retail investors. And Ritvik comes to Raghav and asks that he doesn't know how to invest in the market. So can I invest Ritvik's money? So I said, okay, I'll invest Ritvik's money. If a lot of people come to me and ask me to invest their money, what will I do? So I have 10 people asking me to make investments worth 1 lakh for them. What will I do? What will I do? Any answers in the chat? I will keep a small commission, yeah, but what will I do with that 10 lakh? Invested in stocks. So I'll pool them. I will make a 10 lakh rupees worth of fund, which I will invest in the stock market, and I will keep a small commission in that. That is what a mutual funds are. So mutual funds are similar to institutional investors. Institutional investors also do similar things, that take it, pool in money from retail investors or companies and then put it in the stock market. So what will be domestic institutional investors and foreign institutional investors? What is the difference between them? Between a domestic and an domestic institutional investor and a foreign institutional investor? Their nationality, exactly. So a institutional investor that is based out of India, like LIC, will be called a domestic institutional investor. So LIC is India's brand, it will be called a domestic company. Similarly, Apple, it's a foreign company. So if there is any institutional investor in foreign, outside India, it will be known as a foreign institutional investor. Perfect. Any doubts till now? Any doubts till now? You can ask me if you have any doubts till now. Anything you want to ask about stock market? So we'll talk about how stock trading as a career works. So stock trading involves buying and selling of financial instruments. In this case, stocks. It involves analyzing of the companies and executing the trades, making portfolios. Like we discussed for institutions, I could also manage funds individually. So let's deep dive a little harder into this. So what would be the qualifications that you require to be a professional stock trader or go into financial markets? You might need a bachelor's degree in business, finance, or economics. Advanced degrees do help, such as masters in finance or MBAs. Or you can have professional certifications like a CFA or a CMT, a chartered market technician or a chartered financial analyst. Then what are the hard skills and soft skills? We'll discuss upon. So hard skills are fundamental analysis, technical analysis, risk management, and trading software. So what is fundamental analysis? Now let's assume I want to invest in Raghav's pizzeria. I opened a pizzeria. I will go and read what are my future projections. How will the pizzeria perform in the next 5 years? What will be the profit? What will be the loss? That will be known as a fundamental analysis. Now, what will technical analysis? So suppose tomorrow something big happens in India. Okay. and due to some reasons, the share market crashes. At that time, I will see the technical analysis using charts and patterns to identify that when is the right time to buy the share. The third is the risk management. Now, if I have 100 rupees and I have to go to the stock market, will I invest into entire 100 rupees in Raghav's area? Will I fast? I need a fast answer on this. No. Perfect. I'll tell you why. So let's assume Raghav tomorrow decides to tell that I don't have a good pizzeria going and I'm closing the pizzeria. I will lose all my 100 rupees. Ritvik will lose all his 100 rupees. So what Ritvik will do is he will invest in 5 companies, 6 companies, 20 rupees each, so that the risk is diversified. That's what risk management is. And then obviously you should know how to use trading softwares like Zerodha. If you want to get the tools right, understand fundamental and technical, you could go through TradingView and Screener. So these are the hard skills. Now soft skills are decision making, analytical thinking, attention to detail, and adaptability. We'll talk about this. So if Raghav wants to invest in a share, Raghav has to make quick decisions. Have to first understand the company using analytical thinking. Then Raghav has to see every possible detail. I might be hiding something into the books, right? There might be that my company is not profitable. So I have to see all the details and then analyze the details. Based on that, I have to make a decision. So let's assume I did this for 1 month and I am to make a decision tomorrow that I will gonna buy a share. But tomorrow I read that the pizza market is over and now it's the burger market that's going to come in. Will I still make the decision of buying the share when I know that the demand for pizzas will decrease? No, right? So that's where adaptability comes into play. Let's go further and understand more. If you have any doubts, you can ask me at any point. Okay, so how will a career trajectory look like in finance? So in the first 2 years, you will join as a junior analyst. You'll earn approximately 16 lakh rupees. Then you'll promote to trader 2 to 5 years. You'll earn approx 25 lakh rupees. Then you'll become a senior trader after 5 years. You'll earn 45 rupees of LPA plus you'll earn incentives and bonus. So it's not 45 lakh, it goes way more than in finance. And after 10 years of experience, you become a portfolio manager where you actually manage portfolios for the company. So 60 lakh is just, very small amount at that time. It's just a fixed component. Your bonuses could go up to 10 crores, 20 crores, 5 crores, 2 crores, anything if you are a portfolio manager. And then obviously, once you are a chief investment officer, then after 15 years of experience, then that's crazy. Like you will be running proper hedge funds for the companies, proper investment funds with approximately packages up to 2 crores and then bonus components. So I can't even define that good of a bonus components. So are there any doubts or can we begin for the trading simulation now? Can we begin for the trading simulation now? Or are there any doubts? Okay, let's start with the trading simulation. Can you view my screen now? Is it visible? The simulation? Or is it still the stock screen? Can you see the quiz screen now? Anyone in the chat box? Manpreet, can you view the screen, the quiz screen? Yes, perfect. So let's add my name as Raghav. Perfect. And we'll start with the simulation. So you all have to answer.
Raghav, the polls are on the screen.
Perfect, perfect. So we'll be reading about how to analyze the trends and the market here. Okay, just give me a second. Perfect. So we'll start here and we'll start with the question 1. So here is the case study. You are an investment analyst at Morgan Stanley. You deal with 2 types of funds, mutual funds and hedge funds. Let's understand the difference between 2 of them. Okay. Perfect. So mutual fund is designed for normal retailers, whereas hedge funds cater to high net worth individuals, someone whose net worth is exceeding 5 crore or globally $1 million. In mutual funds, minimum investment can be as low as 500, whereas in hedge funds, the minimum investment starts at 24 lakhs. Mutual funds are regulated by SEBI, whereas hedge funds are often less regulated. Mutual funds typically focus on long strategies and do not engage in trading or short selling. But hedge funds have every type of strategy that is possible. And that's why they are for the HNIs, because the risk is very high, but the rewards are also very high. We'll just move ahead. Okay, so we have to cater to a high net worth individual and they want to make an investment of $100,000 in the hedge fund and they want to double their investments. Okay, this does not happen usually, but still. So let's see what all we have to do to make these decisions. Any doubts till now? Anything that you want to ask or let us know? Anything? No? Okay, we'll move ahead. So now we have to figure out which industry is booming. Okay, and it will depend on the market trends, opportunities, and let's see what all information do we have. Okay. Here are the 4 industries that we have. The first one is technology, which is growing due to innovations in cloud compounding and AI, which offers substantial returns through high profitable industry and gives us a fast return. Okay. The second is renewable energy. It's growing due to sustainability and climate change, but it has some regulatory uncertainty and the cost of capital is very, very high. That means you have to make a lot of investments and there are regulatory uncertainties. So let's see. Then we have healthcare, which is growing due to demand for innovative treatments and advancements in medical research. But again, it requires high research and development cost and again, a lot of regulatory hurdles. And then we have wide range of consumer products, consumer goods, which are involved with low growth potential because there is a lot of competition and preferences. So which one will you choose? We'll need a quick answer in the poll. Which one would you like to choose out of the 4? Just answer it in the poll. And the highest votes, we'll take that. We have 3 options. Fast, guys. Okay. Someone has chosen healthcare. Someone has chosen healthcare. And we'll let it in the next 5 seconds. Okay. Let's see if it's right or not. Yes, it's perfect. So the answer was technology because it has high scope of growth. It has innovation and profit. We have already studied that renewable energy and healthcare involves high R&D costs and regulatory hurdles. Then consumer goods had a lot of problems in the growth and potential. So that is the reason why technology is the best answer here. Let's move ahead for our second question. Okay, since the client is investing a huge amount, that is $100,000, they don't want to put all their eggs in a basket. Which of the following options would you recommend them? Would you want them to invest in a single high risk and high reward stock? Do you want to invest across stocks of different companies in technology or invest in a newly established tech startup to leverage early stage growth opportunities? Okay. Okay. We have 6 answers on the poll. We'll wait for another 5 seconds. 5, 4, 3, 2, 1. Okay. We'll choose with the option 2. Perfect. As I told you, diversification is the key, right? If you don't diversify, there are chances you lose the entire $100,000. Perfect. We can see the client doesn't want to depend on a single company, even if it's involved early stage. And the client does not want to depend on a single company if it's early stage with growth opportunities. That means not startups, but he wants the company to put in money into technology thing. Let's move ahead. Okay. As the technology industry is booming in 2022, you recommend your client to invest in software and hardware companies. So you conduct some research on software companies. Let's see the information you've gathered. Let's see. Okay. We have seen Google, which has focused on advertising, facing increasing competition and saturation. And Google Cloud is growing. However, Microsoft say it's a little behind. Meta has focused on advertisement, which is facing increasing competition. So Meta is also and Google is also both are facing competitions. And there is no presence in cloud computing market. Microsoft has diversified its portfolio, okay, Azure, Office Suite, Xbox, and Microsoft's Azure cloud compounding platform is a major leader in the revenue driver. And Oracle relies on legacy products, databases, and software, which is also facing a lot of competition. And Oracle is investing in Oracle Cloud, but is struggling to keep pace. Okay, so we have 4 informations. Everyone will be on the same page. We'll move ahead and see what's the next thing about. Okay, financial performance. Google and Meta both have mediocre performances. Oracle has slow revenue growth, but Microsoft has strong financial performance. So, innovation in artificial intelligence may drive long-term growth in Google, but in Meta, the long-term sustainability is the questions because the social media's impact on mental health has been a significant problem. And let's see for Microsoft, investments in R&D and strategic acquisitions, such as 49% stake in OpenAI, has positions for long-term growth. And Oracle is transitioning its business model from primarily selling software licenses to subscription-based model. Now, which will question its growth, whether the thing would be feasible or not. Okay, so based on all the information that we have gotten, which company would you invest in? Just put on a poll for question number 3. Answer here. Manpreet, can we open the poll question number 3? Perfect. Just answer fast, guys. Let's see. Okay, we have 4 options for Microsoft. Okay, someone has put in for the option 4 as well. We have 5 for Microsoft. Let's click on Microsoft and see what's the right answer. Perfect. So it was Microsoft. That's good. That's great. Because it has diversified and stable technology. It has taken investments into OpenAI. It has also shown good financial statements and an investment opportunity. While Google, again, its dependencies on advertisements, same with Meta, and Oracle did not have the best business model as well as a lack of diversification. Let's move forward. So, you decided to recommend your client to make an investment of $44,000. They buy 200 shares at $220. Okay, let's see. You made the right choice by asking your client to invest in Microsoft. On 30th of November, OpenAI launched ChatGPT. Microsoft has a 49% stake in OpenAI and its share price increases in 1 month. Okay, it's gone to 255 in just 1 month. That's about 15% return. So calculate the percentage change in if its share price increased to 255 from 220. I just told you the answer. What is it? Or was I wrong? Calculate it fast. Okay, a lot of people are saying 15.9. Let's see. Let's see. Oh, 5 of 5 are saying 15.9. Let's answer this. Correct. It was a 15.9% return in Microsoft. So how did we calculate? Its change in price, that was 35, divided by original price into 100. Microsoft share price is booming, and this has negatively impacted the market value of its competitors. What do you think Microsoft's competitors should do with this? Change their strategy and develop an AI-driven conversational model? Focus on cost-cutting measures to improve profits in short run? Ignore Microsoft's chat success due to ChatGPT and continue with their existing strategies? Which one? Which one? We have three people answering, four people for the first option. Let's see if it's correct or not. Yes, that's the correct answer. See, that's because it comes up to adaptability. If they neglect investments in AI, it could have a lot of loss of competitiveness in the market. Ignoring rapidly evolving landscape of artificial intelligence would lead to loss of market share. Perfect. We'll move ahead. Now, Google announces Bard. Google posted an online ad on their Twitter feed to announce Bard. It includes a GIF showing Bard in action. However, one of the points in Bard's response to the prompt was factually inaccurate. And then someone asked this. Let's see what happens. Google is afraid that failed launch will lead to negative stories. Such stories can have a huge impact on the market. Based on launch of Google's AI conversational model, should you recommend your client to switch their existing investment from Microsoft to Google? What do you say? Yes, invest all 44,000 in Google instead of Microsoft. Yes, but only invest 30,000 in Google and 10,000 in Microsoft. Yes, but only invest 22 in Google and keep 22 in Microsoft. No, Bard's launch was a failure. Let's see. Okay, two people have said the third option. We'll open the poll for 10 seconds more. 8. Okay, all of you are saying third. No, Bard's launch was a failure. We have just discussed that the share price could fall because if Google had made Google's chatbot had factual errors in the first video demo. कोई बात नहीं, we'll cover this up. Oh, and you can see, though you did not make the right decision. So Google's share price dropped from 105 to 89 in less than a month. You have successfully identified the company that your client wanted to choose. Now it's time to choose the hardware company. Let's see what information did you get from the research. Let's move ahead. All software companies want to launch their own AI-driven conversational model. However, AI chatbots are made on large language models, LLMs. To train LLMs, you need graphic processing unit chips. You identify two main manufacturers of GPU chips, AMD and NVIDIA. AMD has competitive performance at more affordable price points. Their GPU chips have strong computing capabilities and are popularly used in gaming. Some countries are banning games due to its negative impact on physical and mental health. Whereas for NVIDIA, their GPU chips have CUDA, a proprietary technology which is widely beneficial for training large language models. Their order books for the next 2 years reveal high demand for their chips. Let's see. Based on the following information, what would you recommend your investor? Invest the remaining in NVIDIA, invest the remaining in AMD, invest 6,000 in NVIDIA and 50,000 in NMD, invest 10,000 in NVIDIA and 46,000 in AMD. We'll need the answer for this quick, fast. Okay, 4 out of 5 people are saying the option 1. Let's see. Let's see. Yeah. Perfect. Perfect answer. So we have invested 56,000 in NVIDIA, and all the leading companies who are trying to launch ChatGPT rivals would prefer NVIDIA over AMD because of the CUDA technology. Other options are incorrect because NVIDIA is obviously a better choice than AMD, as we have seen in the reasons. Let's move ahead. Your client makes an investment of $56,000. That means $4,000 at $14 of price. Okay. Let's see what happens.
You made the right choice by asking your client to invest in Nvidia. Nvidia stock prices are touching the sky. It has skyrocketed 239% in 2023. Nvidia's share price was $14 in starting of 2023. The share price has increased by 239%. Calculate the new value of Nvidia's share price. Let's see. What are the options? We have option 3, 2. Let's see option 1 with 2. Now we have, okay, option 1 is leading with 1 extra vote. Let's see. Okay, so 8 people are 4 people, majority people are saying option 1. Oh, that's wrong. Because its increase in share price is 239% of 40. Increase. Now you'll have to add the increase, not the total price of the value of the share. So the share has not gone 239% of 40. It has increased by 239. So the formula is hold price plus increase in share price. So the answer is 47.46. Now your client's financial investments are 44,000 in Microsoft and 56 in Nvidia. As you near the end of the work, you have to prepare a document to summarize client's investment. Let's calculate how much profit has your client made till now. So Nvidia, 4,000 shares, buying price 14, current 104. Microsoft 220, current 420. How much is the total price? What's the value of your portfolio? What is the total profit that your client has made? Okay, 5 out of 9 people are saying first. Should I log that? Should I log that? Poll is not coming. Could you please reopen the poll? Perfect. Answer fast, guys. Option 4, okay. Option 2. Option 2, okay. Okay, option 4 and 2 are going very fast. Okay, it's 4-4. Okay, that's crazy. So I'll go with my intuition. Let's see option 4. Perfect. The answer is correct. Let's calculate it how. So profit from Microsoft shares was $200 per share. And we had 200 shares, that's $40,000. And from Nvidia, it was $90 per share, and we had 4,000 shares. That means total option is 400K. Your client wanted you to at least double their value of 100,000. But how many times has the original value increased if the profit is $400,000? Write it in the chat box. Let's leave the poll. Write it in the chat box. The answer. Only the number. 1, 2, 3, 4. Only the number. Come. 3. Okay. 3. 4. 3, 3, 4. I have only 3 options right now. Tell me. Tell me. We'll close this question in the next 5 seconds. 5, 4, 3, 2, 1. Okay. So we have 3 options for 4. It's 5. Okay. So original, the profit is $400,000. So the total value of the portfolio is $500,000. So how has the current value increased from the original value? 5 times. Perfect. We'll move to the next question. Congratulations. Your client just wanted you to 2x their investment, but you made 5x. Your client is extremely delighted with you. And we are done with this quiz. Perfect. Can we see the screen back? Yeah.
Raghav, we have Utsav. So,
We have Utsav joined in.
hey,
Perfect. Let me please introduce Mr. Utsav Patodia. He's the Associate Director at Masters Union. Welcome, Utsav. He's an ex-management consultant with experience across Booz Co, LEK, Arthur D. Little, and Monitor Deloitte, specializing in M&A. He has led $1 million business transformations and privatization efforts with government and Fortune 500 clients in India and Middle East. He has advised global private equities on K-12 consumer tech, industrial buy-sell side mandates across Asia and SEA. He is recognized consistently by practice leadership, top 3 to 5%, for excellence in documentation, delivery, and multi-case execution. He's an active recruiter and ecosystem contributor across IITs, IIMs, and ISB with strong exposure to high growth private equity and strategic investment frameworks. Welcome, Utsav.
Thanks, Raghav. Guys, don't believe anything that he's saying about me. It's all faff. It's all
No, no.
they
He's
picked it
a
up from somewhere
fabulous
on
person.
LinkedIn. Awesome. Thank you so much for this introduction, Raghav. I hope you're having a good time delivering this session, and I hope the students are having a fantastic time listening to you and consuming and digesting information from you. I saw some of the performance in the stock simulation. How do you think they did?
I think they answered about 9 out of 11 right questions. So that was
Awesome.
a fabulous thing. When you're calculating too much numbers in less than 20 seconds, that's good. That's fast.
Nice.
Perfect, Utsav.
Super.
So we'll move ahead.
Yes, please.
So what do you think, Utsav? Like, what does it mean to be a stock trader? Like, can you explain using an example based on your work, your understanding?
So, Raghav, I feel stock trading is not just an exercise in finance. It's a lot more of an exercise in psychology, right? You need to understand more than what to buy, when to buy, right? And more than what to buy and when to buy, also when to sell. Because I've had instances with me personally also in my trading experiences where I've bought a stock, bought a huge quantity, and I can see profit. Let's say in 5-10 days, the stock has moved up 10%, and I see a huge profit because of the quantity that I've purchased. But then there's this catch 22 decision making that I need to do, right? Whether I need to sell the stock when I see that 10% profit or wait for it, because assuming that it'll go beyond 10% as well, right? Because there's a lot of news articles whenever stocks go up, all the news articles will say that, hey, it'll keep going up. This is the reason why the company is doing well, right? So then you start getting influenced by a lot of external information and the noise that comes through with it, and hence decision making gets impaired. And the kind of luck that I've had, right? Every time I sell a stock, it only goes up from that point, and every time I buy a stock, that's when it starts to fall from that point. Right. So hence, as a trader, what's very important is to have that right psychology and right discipline as to when to stop. They say that trading is closest when it comes to gambling, which is legal, right?
Right.
So some
I think I've
principles
also
of,
lost a lot of money
yes, of course.
in this gambling.
So some
No, but
principles of poker gambling do come in handy.
not some. Personally, all of these principles are similar. I'm currently
oh, I think we have lost Raghav.
Can
Yeah.
you all hear me?
Yes, we can hear you again. Perfect. Yeah. We had lost you in the
Perfect. I
interim.
think there
You
was a bit.
mentioned you've learned quite a bit from gambling with respect to trading, and then we lost you post that.
So I'm saying that I've learned a lot about real money games working with Zupi right now.
Yes. Yes.
And there is a lot of psychological similarities between the stock market and the real money game when you play it. So
Yep.
perfect. Perfect. So like, can you share some examples of successful stock traders? Like personally, I love Mr. Rakesh Jhunjhunwala, Warren Buffett, and Radhakishan Damani. Someone who you inspire, or maybe any one of these you like, or something that they did right in their early stages.
No, absolutely, absolutely. I really admire a very underrated name. His name is Ashish Dhawan, right? You'll have to probably Google to figure out who he is. But I'll give you a quick background. He graduated out of Harvard Business School, started his own private equity fund in India. The first PE fund in India was started by Ashish Dhawan. It was named the Chris Capital, and he's also the founder of Ashoka. So Ashish started the fund, and for him, two major investments were Shriram Transport and I think Infosys. These are the two names that really did well for the fund. And now he's made so much money out of the carry from the fund that he just chills and invests money as a personal portfolio. And but his way of investing is very similar to how private equity funds invest, which is you go speak to the management first up, build a view on how the sector will perform, right? Is it a 10-year game? Is it a 5-year game? Is it a 20-year game? Second, you understand how that particular company is going to grow. How is that management doing? How are they doing in the market? What is the market share? And so on and so forth, right? Third thing, you start speaking to the promoters and understanding how transparent are they, the entire corporate governance piece. Do a background check by way of speaking to vendors. And once you are fairly comfortable and secure in terms of your due diligence, that's when you put in a huge chunk of money. And by huge chunk, I mean owning as big as 2 to 3% of the company itself, right? And then you start following the company on a quarterly basis. Every quarter, what are the results coming in? Are they sticking to the pattern that you had in your first place during your diligence phase about the company? And as long as that pattern is being followed, then you stay invested. As soon as there are quarters when that pattern is not being followed, then you start figuring out whether uh, you want to keep the stake or you want to sell it off, right? And he's done the same thing, I think, stock after stock with companies like Quest Corporation. So Quest is the supplier of blue collared workforce to companies. And again, with the thesis being that blue collar as a sector and outsourcing of blue collar as a sector will grow in India over the next decade, right? He's done that with Quest. I think he's invested in a couple of insurance plays as well. So yeah, Ashish is personally someone who I really admire.
Right, sir. No, I was just wondering if anyone has any doubts during the conversation, they could just write it on the chat box or raise their hand. And if they have any questions, anything about whatever we are saying, feel free to ask. Uh, no, but I really something very different that we could learn about private equities from and understand this. Something which is very unique. So you have worked so much in consulting as well as with private equities. So what are the skill sets required to excel in this role? Like what are the transferable skill sets that this field teaches you? So let's divide it into two questions. The first, what skill sets you require, and what are the skill sets that these fields teach you in altogether as a person.
Yep. Absolutely. So I think I divide the question into two parts. One is what are the skill sets that you require to get into these places? Second, what are the skill sets that you cultivate as a result of being in these places, which allow you to succeed in the stock market, right? So answering the first piece, what is required for you to get in? Very strong academic scores, getting into their target schools, which they typically recruit from, doing very well in those grades and largely academics, little bit of extracurriculars as well. So keeping like being a nerd and a geek is what gets you into these places. But the question is, what do you really learn once you get in to these places, right? I feel these places really cultivate the ability to think first principles whenever you're evaluating a sector and industry. And I can give you an example, right? So even today, we know that in India, only 7 to 8% people trade in the organized markets, which is the stock markets, right? Having said that, the number is around 45 to 50% in developed economies like the UK and the US. So there's a huge runway between that 7% to 40% as India targets to become a developed economy and as we become more and more westernized and organized, with digital penetration also increasing quite a bit. So when you know that this is a trend which is going to play in the next 10 to 20 years, then what are the companies that are going to benefit as a result of this trend, right? There are stocks like CDSL, which control every stock that you purchase. So whenever you're going to purchase a stock, it is going to be purchased either by way of NSDL or CDSL, right? So when you know that the number of people who are going to purchase stocks or invest in the markets are going to increase from 4% of Indian population to, let's say, 45% of Indian population, then you know for a fact that a sure shot beneficiary of that would be something like a CDSL, right?
Right.
And
I think I was hearing Mr. Nikhil Kamath also.
oh,
He was also
fantastic.
saying similar thing that currently in India there are only 14 crore demat account holders, and active
Mm.
number is even lesser as compared to a
Yeah.
150 crore population.
Yeah.
The day even there is a even 20 or 30% people of the country start investing into the stock market, the number of demat account holders and the Indian stock market, the total capitalization will rise
Yeah.
so high. So just adding a
No,
quote
that
from
also
him.
explains the growth of Zerodha year on year, right?
Hmm.
And if you look at CDSL as a play, you can further translate that play into all the brokerages. So Zerodha will do well. Angel Broking, which is a brokerage house, they will continue to do well. And if you look at this business, it's a very high tech business. That means if, let's say, CDSL is currently serving 14 crore demat accounts, if the number of demat accounts increase by 10x, 140 crores, CDSL does not have to increase the number of employees. They can serve the same 14, they can serve the same 140 crore demat accounts with the current number of employees, because it's largely a tech infrastructure play, right? They might have to invest in a couple more servers, but they don't have to linearly increase their employee costs as they increase their revenue, right? So all the additional revenue sort of flows into their PNL and goes into their PAT, which further increases their earnings year on year. And if they're valued at a certain PE multiple, then that multiple only expands. And even if the multiple doesn't expand, then because the earning is increasing and the PE multiple remains the same, the price has to increase to catch up with the earnings. So CDSL is like an obvious
Right.
play. Any brokerage house is an obvious play. Any listed brokerage house. The day Zerodha gets listed, I'll be the first investor. All the AMC companies, HDFC, AMC, are an obvious play. Right. All the servicing houses to CDSL are an obvious play, like KFinTech, then CAMS. These are all servicing houses to CDSL. So you realize like one principle, which is that, hey, the penetration is going to increase from 4% to 45%. And then from that macro trend, you are sort of boiling it down to the stock level on what stocks will do well.
Right. Oh, that's quite interesting insights. I think with insights, we have also gotten some tips on where we can invest in the market right now.
Yeah, guys, only at your own risk, guys. Okay.
Mutual funds निवेश करना जोखिम हो गया नहीं है.
Absolutely, absolutely.
No, and what are the skills that we learn in this? The second part, something that particularly you think that we learn investing in the markets. I think one thing you obviously talked about psychology, knowing when to invest and when to not,
Yeah,
using that thing.
yeah.
But something different.
And also, Raghav, I feel you start tracking the macros and fundamentals very closely, right? Now, as soon as you're putting in some money into that stock and in that sector, anything that happens into that sector, you are the first person to know about it. You're reading the newspaper, following those notifications. So then you start tracking macros closely at the sector level, and you also start tracking macros at the market level. For example, then you would want to know, hey, what will be the implication of the interest rate cuts? Will that lead to an increased money flow in a country like India, or will it lead to a decreased money flow? Right? When the increased money flow will happen, will it lead to an increase in the market, or increase in Sensex Nifty, or will it lead to decrease because the market's already expecting that? Right? So then you automatically start tracking a lot of the macro implications because of some of the investment bets that you've made. And also the other thing is you start becoming very careful about the company results. So quarter on quarter, you should be following and tracking the metrics that the company is posting, right? And if you see that there's a degrowth, you'll have to start investigating what are the reasons. And you'll automatically also start, at least I do it, start attending the investor con calls that the companies organize to further explain the reasons, right? So yeah, so these are some of the, I would say, hard skills that automatically develop as soon as you put in skin in the game.
Right. No, I remember when I started investing 2, 3, 4 years back, my Instagram time reduced and my economic time is the digital version time increased because
Yeah.
now you want to read everything. because
Yes.
there is always a fear in your mind that I
Yes.
could lose the money. And you know,
Yes.
it always gives you hope also of earning money if there are positive views. So
Yeah.
that's something
Yeah.
that perfectly
So I
works.
remember I invested in Airtel, and that was also the time when a lot of legislation was taking place because of the AGR dues, and everybody was questioning whether Vodafone will exist or not exist, right? So I was following line by line Supreme Court hearing on what the lawyers were saying about that AGR dues. It was like watching a live case with Harvey Specter doing the delivering the case, right? And following
Yeah.
it because you wanted to understand what would be the implication on the stock that you would have invested in.
So how do you think the life of a trader would, a day of a trader would eventually look like? If
Yeah.
we have to, you know,
So Raghav,
start.
here I would probably distinguish between an investor and a trader. Typically, an investor would do a lot of hard work before putting in the money. And once they put in the money, I think it's more of a quarterly affair wherein they track or want to reevaluate whether they want to keep retain their portfolios, right? But if I look at a trader, there's a lot more leverage and lot more technicals as opposed to fundamentals, right? So in that case, if you are a trader who's a very mature trader, psychologically safe, you undertake a stop loss, then I think a major part of your day, probably the first couple of hours, just go in finding the right trade. Right? You're not, still not pulling the trigger. You're just trying to figure out where to trade, right? So those 2 hours are going in terms of chart scans. And before that, last night you've already decided. You have some inkling on where you can put your money in. In the morning, you wait for markets to open, 2-3 hours you check, and then you figure out whether you want to take the same bet that you had decided last night or something else. Once you have taken the bet, that's when the actual patience and psychology sort of gets into the way, right? If it is an intraday bet wherein the orders inadvertently get cancelled by the end of the day, then most of your decision making has to be done by that day itself, right? If it is more like a futures and an options bet or a bet wherein you can prolong the transaction, then the decision making is way different, right? Then you have to decide whether to retain the investment or not. In intraday, you know, whatever it is, the showdown will happen by the end of the day itself, right? And
Right.
generally, people who have a stop loss, they live a very peaceful day, right? They've just taken that trading position.
No, they full day. They are also stressed only. I've put stop losses, and when they hit, yeah,
Yeah, you don't want them
stress is
to get
always
hit.
there.
You don't want them to get hit, but once
Yeah.
if they till the time they're not hit, you're fine, right? And
Yeah.
it's also more of a disposition kind of a play, what kind of person you are. Like I am a risk averse person, so for me trading is not the easiest thing to do. But for people who like to play with fire and who like to take that risk, there is also a reward, right? But it's just like tossing a coin. You can't expect heads in every toss. um, every maybe 5 coin tosses or 10 coin tosses, the law of averages might come into play. Hence the day of a trader looks like a little bit of anxiety, a little bit of research, and it definitely gets wrapped up by 3:30 p.m. That I can guarantee.
Right. Unless and until your, you know, stop losses don't haunt you at night.
Yes, that is true.
So, what are the educational qualifications? Like you talked about being a nerd in the market, having good academics. We have also discussed that an MBA in finance. I was telling them about that an MBA in finance or a CFA or a CMT could help you. Any
Yeah.
specific qualifications that you think, or are these enough? Like have been covered?
No, I'm
Or
aligned with you on all of these, Raghav. I think CFA, FRM, and MBA, and even chartered accountancy, they really help with the fundamentals of finance, right? Having
Okay.
said that, when you look at trading, there's obviously the fundamentals that you leverage to trade, and also you look at technicals to trade, right? So while these 4 qualifications take care of the fundamentals, you should also look at technicals, which CMT as a course covers really well, the chartered market technician, right?
Technician.
So
Yes.
if you do CMT and you complement that with any strong fundamental course, which is either chartered accountancy, CFA, MBA in finance, or an FRM, then that is good enough in terms of your trading toolkit. After that, it is all about reading, learning, and applying. In terms of a toolkit, you are very well sorted.
Right. So, with AI coming into the picture, we get this question a lot. Do you think that, stock trading, finance will still have a future, or will, AI take over all the algorithmic tradings and all the predictions will be already done and made by AI and the stock markets will work differently?
No, so the beauty of stock trading is that even if nobody employs you, you have your own capital and you can trade yourself, right? So if not an employee, you will always remain an entrepreneur with stock trading. So I think that way you will be safe. Having said that, how trading will evolve is something that we should all be observing. I feel that people who can code and understand how to maneuver and set up automations will be uh, quite a few like very much in demand. Then people who can uncover patterns in terms of irregularities will be a lot in demand. For example, there are a few arbitrage funds which uncover patterns like, hey, what is the stock price in BSC versus what is the stock price in NSC, right? And there are some microsecond variations between the stock price in BSC and the stock price in NSC. And these HFTs are so well trained that they can use those picosecond, because the variations are microsecond, they can trade in picoseconds to actually exploit the price differences. So buy in BSC, sell in NSC, or sell in NSC, buy in BSC, whatever. Sell in BSC, buy in NSC, whatever, to make arbitrage, which is short profit and loss bets, right? Now,
Right.
as of now, it is microsecond, picosecond. With the advent of AI, it'll maybe further reduce in terms of time frame. That is one use case that I can definitely look at. Second, I feel with the advent of AI, maybe we can just tell ChatGPT that, hey, please buy XYZ stocks that you feel are right, and your feeling should be dictated by these 10, 15 parameters. And then the ChatGPT can not just suggest stocks, it can maybe also buy stocks for you and also monitor the stocks for you, right? So the anxiety in a trader's life can probably reduce with AI coming in. But if I look at employment as a scenario, I think HFTs would only do better. But if you are into careers like equity research and careers like stock research, then probably the headcount might reduce or your role will evolve quite a bit.
I think there is one thing that I was reading about algo trading is. So yes, I don't know much about how AI could evolve algo trading, but when I was studying about algo trading, what I found out was there has been no particular algo that has been proven to, generate 100% profit. So there are good algos that give you a 16%, 18% return,
Yep.
which humans also do. The major reason that I read about was that in stock market, predictions can be made through charts and your financial projections, but not
Mhm.
based on real outcomes. So let's
Yep.
assume the recent Iran and Israel war that has happened, which has led to a lot of problem in the stock market. We have seen quite a few days where mid caps are crashing. So this is something that cannot be predicted. It's a lot of human element.
Yep.
That is one thing that I think humans will always have the upper edge upon, knowing how to trade in these scenarios versus the algo trading. But maybe AI gets so advanced that AI also understands that whenever such things happens, what would be the right price to buy, what would be the right time to buy. So something that I was reading about, found
No,
it quite
absolutely.
interesting.
Very well seconded on this. I feel AI today is still not equipped to predict black swan events and the reaction to
Hmm.
black swan events, right? Something like
Right.
autonomous driving, right? AI still knows how to drive on a road wherein it can see two car lengths worth of distance and see that it's vacant for those two car lengths. But if suddenly there's something that comes into in its way, right, and it comes from two directions, then it still doesn't know what to do and prioritize which one is better, which one is not. So yes, agreed on that. It still hasn't been able to cultivate decision making as the way of trading.
Perfect. So any particular investment decision that you have made, or maybe in private equity, maybe with any HNIs that gave you a lot of profit, or maybe worked out well, maybe some kind of reputation, some kind of incentives, something that the firm earned or you earned.
No, absolutely. Happy to discuss that. So during COVID, when we read that a lot of participation was happening from tier 2, tier 3 cities because people had so much time in their hands. So everybody was trading the markets. I think it was just natural extension of this trend that we realized we should invest in all the brokerage houses and the CDSLs of the world, right? So there was a sector thesis, and obviously the firm that I was advising invested in a particular brokerage house, and we were obviously not allowed to invest personally in that brokerage house. But then, since sector as a thesis was something we were convinced with, and I was also convinced with, I invested in the other stocks that we looked at in that sector, right? And thankfully, we did well in terms of spotting that sector as a thesis, and I made like 8x in a time frame of 2.5 years. So that worked out really well. Probably telecom as a sector, I've been very, very bullish on because India as a market has a very low ARPU, which is around 140, 150. Now it's trading around now it's ranging around 170 to 180, while most of the other markets have an ARPU which is above $6, $7, right? So then we should definitely converge toward that equilibrium range of $6, $7, and hence any strong telecom play which is not cash trapped, something like an Airtel, or a Geo. Geo is not specifically listed for telecom, so something like an Airtel, I feel would be a great play going forward. Again, that's a function of macros. Things might change, but as of now, looking like a good play. And again, Airtel also, I've put in money 6 years back, and since then it's been an easy 5x from that time frame.
So, another question. What is one thing you like about your field and one thing you dislike?
Okay, yeah, super. So the thing that I like about my field is that it keeps you intellectually stimulated. You are forced to read quite a bit, and it is almost like you're getting paid to learn, right? And every day it's a new day that way. The thing that I don't like is the sheer pressure that you are in, right? In most of these finance roles, you have, especially when you're advising funds, you have around 17 to 18 hour work days, right? Your actual work starts once the market closes to prepare for the next day. um so that is something I don't like. Just the sheer work life balance is something that is not in your control. Second thing is, sometimes even with the best analysis and the best thesis, the outcomes don't go in your favor, right? And most people, you're not dealing with your own money, you're dealing with somebody else's money, and when outcomes don't go in your favor, then people think that you are the culprit, but it's actually just trends, macros, that dictate things a lot more as opposed to your first principle analysis.
Right. No, I completely agree with you on this. I completely second your thought. I was also thinking that I'd read much more if I'm forced to,
Yeah,
versus I would probably not read anything if I'm
yeah,
not forced to.
absolutely, absolutely.
So, can you bust one myth about stock traders for our participants today? One myth.
Absolutely. So I feel most people think that stock trading is about learning finance. I don't think so. Stock trading is just about common sense and learning psychology, learning to manage your emotions, not being very happy when things are going well, and not stopping not leaving the field when things don't go your way. I think being a stoic and managing emotions help a lot more as opposed to fundamentals of finance.
Right. So I was working with a firm before. It was Shots firm,
Hmm.
and they used to trade they used to teach students about trading as well, where I mentored 100 students while working with them. Plus, they used to manage portfolios. So we had a saying to all the students that when you're coming to the market, only because we were traders based on technical analysis, 5% is for fundamental analysis, 15% of our course would be around technical analysis, and 80% is psychology and risk management.
Absolutely.
That was the level.
Absolutely. Absolutely. I agree.
I remember saying that a lot to a lot of students.
Yeah. Yeah.
So, how can our students figure out if stock trading is the right career choice for them? This is one question that everyone has.
I think, thankfully, compared to other careers, for stock trading, the answer is a very straightforward answer. And I can give a timeline to this answer also. Spend 2 months every week. Actually, this is something that you can't do it over the weekend. Spend 2 months doing trading consistently. Right? If you've started trading in the third month also, then I think you are all set to be a trader. But if those 2 months 2 months itself are repulsive, then I don't think you have it in you to become a trader, right? Because stock trading is not something that you can do out of force. Maybe you can do accounting out of force. Maybe you can do, let's say, consulting out of force, private equity out of force. But stock trading is not something that you can be forced to do. You are either good at it and you like it, or you are just not good at it, you cannot stand it. So spend
Right.
2 months. There are a lot of simulators in today's day and age where you can trade with paper money. So trade with paper money, see how you're performing. And if you feel that, let's say you're not doing well, but you're still liking what you're doing, then maybe stock trading is for you.
Right. 2 months are enough. If you're getting good sleeps, then it's worth it. I was
Yeah,
getting very, very bad sleeps the first 2, 3 months. So I
yeah.
left trading at that time. Now I only work as investing.
Yeah, and
Fundamentals
probably
simply
I'll
invest and sleep.
also say that you'll have to eventually move from paper money to actual money as well, to be able to muscle that energy to pull in the trigger, right?
That's when psychology will come.
That's when psychology will come into play, or when you're using your dad's money or your mom's money, and you've lost some of it, and then you can't face your dad during dinner at the end of the day.
Yeah.
Then
That.
that's the real test of a trader.
Right. So, do you think any particular stream that students must pursue in 11th and 12th to be a trader?
So see, there is no foundation that you have to only do commerce to become a trader. Having said that, because I come in from a commerce background, I feel it just helps organically cultivate those fundamentals of finance, right?
Right.
Having said that, there is like engineering has its own advantages. You understand quant a lot better. You understand high frequency trading a lot better. Most of the HFT firms today employ engineers as opposed to commerce graduates, right? But in terms of fundamental understanding of finance, I feel commerce puts you in a better stead. So the ideal combination is, you can pick up commerce and be very, very good at math and coding, and that should set you up for success in trading.
Right. No, I second that. I was also from a commerce with maths background, though I wasn't very good with coding, so I moved to investing, not in trading. But yeah, I think you can learn technical analysis in any field, even if you're from commerce, science, or humanities. Any field, you can learn technical analysis because it's not associated. You just have to be very good with understanding patterns, and noticing smaller details.
Yep, absolutely, absolutely.
That being said, what are some courses that students can now start exploring?
Okay, this is a tricky one. So
Yeah.
I don't think there are any comprehensive courses that teach you stock trading
Hmm.
as well as just going into the water does, right? So I think
Right.
the way to go about it is start with some paper money, trade, strictly monitor how you're performing, and analyze why you did what you did. Make note of your trading diary. So make a trading diary of sorts, take control of all the trades that you made, put in an Excel sheet, do a little bit of back of the envelope analysis on why things are working, why things are not working. start understanding how to read charts, right? And that can be just type on YouTube how to read charts and then start reading candlestick charts, start reading some of the line charts, go to trading view, and then slowly and steadily it'll be like you get a little bit of information, you start applying it, then you figure out that you lack something, and then you again start reading theory, then you apply, and it becomes an iterative process. That's, I feel, the best way to go about trading. Then you graduate from paper money to actual money, and then you start graduating from actual money to taking leverage with actual money and being able to manage that risk with leverage, right? Once you've graduated these three levels and you have reached a place wherein you can manage your own finances by way of your trading capital or your trading profits, then I feel you are fairly ready to be a stock market trader, either for your own self or for applying to some of the mutual funds in terms of their teams.
So I think you learn fundamental analysis a little more and a little more, theoretical part as well as some of the understandings. There are some certain SEBI exams and SEBI courses also
Yes, the
that
NISM certifications.
NISM and the courses given by NSE.
Yeah.
So I think early people, early traders, they could, go through them. At least they learn more about the fundamental part
Yep.
of
Yep.
the.
Absolutely. And some of to build on what you said, some of the folks want to move to the advisory side of wealth planning and investing. I think there are SEBI certifications that allow you to be a certified
Yes.
SEBI
NISM 1 and 2
advisor,
some levels, yeah.
investment advisor as well, right? So you can probably pick up those. Having said that, these will be strictly for the point of view of knowledge and not really for the point of view of a degree that will get you a job.
Yeah.
Okay.
Right. Perfect. So let's ask the chat if they have any questions, if they want to know anything about the stock market, anything as a career. Anyone, if you have any questions, you could ask us. Yes, Manish, please go ahead.
Yeah, so good afternoon.
Hi,
So
Manish.
I have a
Afternoon.
question to ask. I have a question to ask. So if not trading, what else would you have become? Or I have one more case. I have one more question too. If you could start over the entire trading history, what would you like to change?
Oh, great question. I think, Manish, if I can start over trading, I would like to reevaluate the weights in my portfolio. Okay. So I'll tell you what I mean by this. Whenever I have made like 5x, 6x of my investments, the money that I've invested has been very low, right? It has been something, if I make 5x of 10,000 rupees, that is still just 50,000 rupees. That doesn't monumentally change your life, right? So when you know that you are on track, on a good stock, and you have a decent amount of conviction, I feel then you should also increase the weight substantially to 60-70% of your portfolio, right? The percentage is obviously relative. Everybody has their own risk appetite. But with the right amount of risk management, the weights also have to be adjusted. Otherwise, because the profits are always absolute, profits are never a percentage, right? Analysis is percentage, profits are absolute. So you could make a 200x on a 5 rupee investment. You still made just 10 rupees of profit, right? But if you make 10% of a 1 crore investment, you made 10 lakhs. So the profits are always absolute. Hence, the weights are very, very critical. And if I need to change things, I would just readjust my weights and build that conviction from there.
I think we have one question from Anay. Yes, Anay, please go ahead.
Sir, is stock trading better as a side income or as a main career?
Great question, Anay. Hence, you'll have to start evaluating how good you are in terms of trader by way of A, whether you enjoy it. Second, what kind of outcomes are you able to provide both for yourself and for your family, right? If you can reach a stage in your life where your stock trading income versus your current salary is around the same number, and that is happening consistently, and you can be in that position where you are like, hey, I can, even if the stock trading income doesn't come in for the next 20 months, I still have that buffer, so that one market cycle you can control by way of one market cycle you can survive without that trading income coming in. Then I think you have made it in terms of doing trading as a full-time career. Having said that, most people are not able to reach that stage wherein trading can actually subsume their salary income with a lot of conviction. So till the time you don't reach that stage, I feel it's better to rely on salary income and trade on the sidelines. But again, not waste too much of time, because then technically you're not supposed to be um, carving most of your weekdays for trading if you're working for an organization. And as fate has had it, you cannot really trade on the weekends. So I will say this is actually the best time to figure out whether trading can be your full-time uh, profession or not, because this is a time when you really have a lot of time in your hands, you can explore. But once you start working somewhere, you'll always have to make the trade-off between the salary income that's hitting your bank account versus can you make 2x 3x of that income by way of trading. And it's very lumpy, trust me. It's not as smooth as your monthly salary credit. So can you stomach that?
Okay.
So
And
even I have
Raghav,
Sir, I
anything that you
also
want to
have
to
add?
one
that.
more question. Sir, I also have
Yes,
one
Sanay.
additional
Yeah.
question.
Yes.
Isn't it better to be a investment manager or a fund manager instead of, trading for yourself?
Good question. Again, a yes and a no. It's better to start off as a fund manager because it teaches you what the best practices are. It instills in you the discipline of trading because the funds have a very strong risk management SOP in place, right? So eventually be a fund manager for 5, 10, 15 years, maybe 20 years, and then eventually build that confidence in the market where you can start raising your own funds, right? Because as a fund manager, Anay, you will get maybe 5% as a commission, 10% as a commission, not even 10% actually, maximum 2 to 5%, right? Depending on your clout in the industry. But when you're raising your own capital, that's when you're getting 50, 60% of your commission, right? Or maybe when you're trading with your own capital, then you're getting 100%. When you're raising from somebody else, then you're getting, let's say, 50, 60% in the best case scenario. So I feel you can start off with the first scenario wherein you work for a fund manager, for a fund, and understand what the best practices look like, develop your own muscle trading style, move to the other scenario wherein you have built so much of reputation in the market that there are people who are ready to invest in you or your fund, and then eventually become so rich in the second scenario that you don't want to take that headache of managing someone else's capital. You're okay sleeping peacefully, managing your own capital only because it has swelled up so much. So that's the ideal third scenario, right? So it's a progression, I feel. Raghav, anything that you want to add? Happy to.
So I think one thing that you just mentioned about was the timing. So like when I was in the change, like from class 12 to the college time, I had a lot of free time when I learned a lot of trading. And I think once I came to college, the reason my trading got left was I did not get enough time to, read the charts. So at trade, you have to wait, sit at screen for like hours and hours, and then wait to get a perfect trade, a perfect setup. And I think
Yes.
that was not
Yes.
something that I could do with my college. That was the reason I often made losses too, because I got into hurry, maybe it took a late entry into the trade. So when trading can be only done when you have sufficient time. Investments can be made. Yes, you can make investments alongside work, but trading can, I think, only happen when you have sufficient time. So most of the students are like, I think, in schools right now. So if you have off, you can obviously try trading, right? As also mentioned. But once you go back to school, you won't get the time because the school timings are quite similar to the market timings from 9 a.m. to 3:30.
Yeah, absolutely.
So at that time, I think investments would work better. This was one thing. Perfect. Any other questions?
Anay, does it answer your question? Anything
Yes, sir.
else
Yes,
that
yes.
you want us to cover? Okay, super.
Any other questions from any participants? If you want to ask anything about the career, about uh, anything in the industry, anything in the stock market.
Yes, I do have one more question.
Yes,
Sure,
Monish,
Manish,
tell
go
me.
ahead.
Yeah, so my question is, you told psychology is the important key to stock trading and that thing. So
Yeah.
how do you train a trainee, the person who's coming new to the stock market, and make them learn about psychology barriers and extra tax rate?
Yep. Great question. Monish, I'll tell you, my SOP whenever someone tells me how do I develop psychology is I give everybody exactly the same advice, which is trade for 6 months in the market, maybe less than 6 months, 3 to 4 is also fine, with and move from paper capital to your own capital, make some mistakes, lose some money, okay, and then you come back to me, okay, and then you tell me why you lost money, what is your read on why you lost money, and that's when I give them this book by Nicholas Darvas. You can I'll probably sort of tell Raghav to share the coordinates of the book. It's called How I Made $2 million in the Stock Market. It's a very old book written in 1949. It was found tattered in the US library by this guy called Nicholas Darvas. He made $2 million in 1949, which is as much as easily 2 to 2.5 billion, right? And that book was found in the library tattered, and somebody reprinted it because the learnings were so sound. And after trading for those 6 months, when you read that book, uh, what that book will give you on your face is why you made those mistakes. Because Nicholas Darvas, he himself made the same mistakes that you have made over the last 6 months, right? And you will start reflecting that, hey, this was the mistake that I made, and you can pull it up from a diary or your Excel sheet. Then Nicholas Darvas also tells you what is the best way to avoid that mistake, because he himself has made it and he himself has also figured out a way to avoid it, right? And that book is like a conversation between you and him and your Excel diary. And then after that, once you start applying those principles in your trading, then you will see that change coming in, and that psychological, you start growing as a person psychologically, right? um, Try and do this experiment. So most people that I tell to sort of perform this experiment are not able to, because it requires a good amount of time investment, 3 to 4 months, then reading the book, which is a 150-page book, and then another 2 to 3 months. If you can do that, I can guarantee that you will grow as a trader psychologically, and you will make insane amount of money in the stock market. So I hope that answers your
Does that
question.
answer your question, Manish?
Yes,
Perfect.
yeah, and I have one small question to you.
Absolutely.
What do you think about cryptocurrency and bitcoins?
Yeah. So Monish, I don't understand cryptocurrency and bitcoins very well, because I don't understand what is the underlying asset class behind it, right?
Yeah, just
Now,
the basic understanding of bitcoins and crypto is fine.
yeah. So in my opinion, the way I look at it is every month I invest around, and that number is very personal to everybody. I invest a typical 2 times dinner budget that I would spend in terms of going out for a good lavish dinner. I'll spend that much money, put it in Bitcoin or any of the new cryptos that have become the rage, right? Doggy or whatever, and then forget about it, because I don't know how volatile it is, and I'm assuming that I'll never need that money back again. But if it becomes 50x, 100x, then it starts to materially make sense to influence my life. If not, anyway, I have lost that money thinking that, hey, I was about to spend it on dinner. But I also have a lot of my friends who have tried to trade crypto full time. But here again, I have people who have made it big and have completely gotten destroyed. Uh, just because crypto as an asset class, more than how volatile it is, it also keeps coming into the regulatory scanner quite a bit, both from India and globally, right? And hence, it is just you have to figure out whether it's worth it in terms of your bandwidth to constantly keep coming under the regulatory scanner every time your tax return is going to get pulled up, and you'll have to answer to the tax man. and you will also have to consistently keep making those gains to be able to also let go of 45 to 50% tax and transaction cost on those gains. So when I sort of put in all these contours, I feel like it just doesn't make cognitive sense for me in terms of bandwidth I have to devote. So I just put in like 5-10K dinner budget across the month, forget about it. And if something great happens after 5-6 years, maybe my kids will be rich. So that's how I look at it.
Yeah, thank you.
Any other questions by anyone? Any other participants? Any questions? I think Utsav, all the questions are exhausted. I think,
Yes. I think
we can
Raghav, you've
end
done a
this.
great
Thank
job
you
already.
so much for joining us, sir, and taking your time out of your busy schedule. And on
No
a weekend,
problem.
especially on a weekend, we are disturbing you on a weekend
No
and
problem.
answering these questions. And it was great learning more about how current markets are working, how current financial markets are working, how individuals trade and understand psychology and the way it works. So really thankful for that.
Thanks, Raghav. Thanks, Raghav, for having me
Uh,
here. Thank you, students, for taking out time. I know it's not very easy to stay engaged in virtual sessions, and especially while your vacations are on. I think there are better things that you can do, just such as go out and play cricket, or maybe pursue something else, or go and have matcha, maybe, right? But I hope what you are consuming and digesting through these sessions is not just confined to the sessions. You are going to treat this as your homework later on, and then start devoting more time. And we're hoping that these sessions incite some interest into you, right? Uh, if they don't, then you are then we're happy to be pulled up, and feel free to reach out to us if you have any questions. But please use these sessions not as exhaustive sessions, but as your entry point to these sectors, and then definitely work towards it in figuring out how to leverage it and how to eliminate it.
Perfect. Good, sir. Thank you everyone for joining.
Raghav, should I drop off?
Sure, sure. Sir.
Thanks.
Thank you.
Cheers, guys.
Thank
Thanks.
you.
Bye.